Well, we're going to go ahead and get started. Thank you, everyone, for joining us. I'm Lisa Phillip. I cover higher education for WBEZ and have been working on a project about student debt. And we wanted to have this workshop here to address some of the anxiety and confusion and dread we heard in so many responses to a survey on student debt that we sent out. And we were hoping to bring some folks together to give you some clarity and hopefully some community. Oh, and to that point, there's a couple of poster boards back there with some questions that you can jot down some answers on Post-its, and they're kind of just like a little break from all of this. So I have some wonderful folks up here to help us navigate all of this. This is Brianna Kidd.
Hi.
She she's amazing. She responded to our survey and I ended up profiling her for her story. So she's here to join us and share with us some of her debt journey.
Check it out after.
Lily Rocha is the executive director of Midwest Young Invincibles, and she's also a borrower herself, so she can share some of her experiences. And Maureen Amos is the financial aid director at Northeastern Illinois University here in Chicago. All right, so I thought we should kind of start with how we got here and why the cost of college has gone up so much and why people are having to borrow so much. Lily and Maureen, I know you know a lot about this. If you guys could get us started with that, that'd be great.
Hello? Okay, great. Yeah, so very excited to be here with you guys tonight. So I'm with Young Invincibles. We work on healthcare, higher education, and workforce issues for 18 to 34-year-olds. And we work on higher education because it's one thing that's obviously impacts a lot of folks in that 18 to 34-year-old range. One thing that we have seen over the past few decades has been a few things. One, disinvestment in public education from the state legislatures. So what that means is that less and less of our tax dollars are going to public universities and colleges, meaning that those institutions have to make up that difference somehow. So the way they do that is by raising tuition. So that means that it becomes even more expensive for folks to go to college. And a way to be able to afford it is by taking out loans. Another thing that we did see was that in the 1970s, the federal government encouraged lending and borrowing from folks to be able to access higher education. So it's been part of a federal cultural shift as well as a result of disinvestment from the state legislatures to public institutions. So that's really why we've seen, I think, over the past few years. The other thing I will say that as we've seen with millennials and Gen X and definitely with Gen Z is that a lot of us have been told that we need a college education to get to some sort of economic prosperity. And the data does back that up. So people with bachelor's degrees or higher do tend to make more over their lifetimes. They tend to be able to access more jobs, more opportunities. They tend to have better economic outcomes over their lifetime. But because of that, we were essentially really sold on the idea. I know that I was in high school in the early 2000s. It was like college, college, college. And no matter what the cost, it doesn't matter the sticker price, you're going to pay it somehow and you're going to go to college. So I think there was a lot of that messaging, and that's still very pervasive, that it's really worth it. And again, the data does back that up. But we have to keep that in mind, that it was also something we were told that we needed to do to get somewhere in life.
Yeah.
Just to kind of piggyback on some of what Lily mentioned in terms of the state disinvestment, what that did to particularly the four-year public institutions who still needed to make payroll, who still needed to pay faculty, who still needed to keep the buildings open and make sure students received the quality education they were supposed to receive. What that causes is a need to have additional revenue coming into the system. So there's two revenue streams for institutions. It's state appropriations, and then there's tuition revenue. So if you're falling short in one, you kind of have to make it up in the other. The other thing I wanted to say in terms of how we got here is having worked in financial aid. I've been in financial aid about 30 years at different sectors. So I worked at Triton College, so I've worked in community college setting, University of Illinois at Chicago, Research One, and now I'm at Northeastern, all of which time spent in the financial aid office. What I've noticed is uh, there's a difference between the types of loans when you hear it spoken about in the media. You know, during the time when the Obama administration moved the federal loan programs to federal direct loans, it took banks and servicers out of giving loans and guaranteeing loans themselves. So now you've got a mixture of federal loans as well as private loans. So that's another reason why the loan indebtedness seems to be a little inflated, because you've got students borrowing both. And it's part of the responsibility, I feel, and a lot of those that I work with in the Illinois Student Assistance Commission, in the Illinois Association for Financial Aid Administrators, that we need to work and educate students on what the differences are in terms of needing to borrow versus wanting to borrow, and then trying to coach students through creating budgets, and then looking at expanding grants and scholarship opportunities at our institution, leveraging our institutional assistance so that students don't have to borrow as much. But what we're facing is students who want to borrow. We're not able to tell them they can't, right? Even if we don't see the need, it is that student who wants to borrow, so we cannot tell them that they cannot. There's also some hesitancy with institutions being able to tell students not to borrow through private lenders, okay? There's nothing wrong with that in the instance you have already exhausted some of the free options or some of the non-interest bearing or fixed interest bearing opportunities. So I just wanted to add that in terms of how we got here. There's a lot that's leveled out there.
Yeah. Lily, I know your group has done a lot of work on this issue, especially from a lens of racial equity. Can you talk about who is most impacted by student debt?
Yeah.
Oh.
Yeah, that's a really great question. One thing that we've seen is that not all debt is equal. And what this means is that we've seen, well, one, women tend to disproportionately have a higher average loan debt, and there are more female borrowers than there are male. We also have seen this on a racial lens, where actually Black women tend to have the highest debt burden out of all borrowers. Oftentimes, this has to do because we have folks from racial and ethnic minorities who tend to already have lower resources to be able to go to college, so they have to borrow more. But it could also be compounded by the fact that they may go into less lucrative paying jobs after graduation that may not pay as well, that prevent them from being able to tackle that debt early on. But it really does make a difference when we're talking about closing the racial wealth gap, when we're talking about eliminating student loan debt. It's not just about forgiving borrowers or letting them off the hook. It really is about making sure that we're leveraging that playing field to close that racial wealth gap and equity gap across different racial lines. Because when we see that we have Black, Latino, and female and people of color struggling to pay their debt and amounting even more and more interest, it prevents them from starting businesses. It prevents them from taking out different types of credit. It prevents them from getting a mortgage. And these are things that we know that lead to higher prosperity and greater wealth over their lifetime. So it just even actually further exacerbates that racial wealth gap that we see. So canceling student loan debt really is a racial justice issue. And just we work really on educating lawmakers and decision makers about that reality of our student loan debt crisis.
Yeah. Financial literacy itself is a social justice issue, I believe. And so many of our students that we found just trying to introduce and prepare people for the repayment beginning again was just to go through people with how do you look at a budget and what does it mean to, determine needs versus wants. So just financial literacy in general You know, people don't have that in class anymore. We used to have a class, consumer economics, when I was growing up. You don't see that too often for elementary age students and high school students. So yeah, that's a big deal. You know,
Yeah.
and then making sure that students are aware if you're having an issue, if you think it's going to be difficult, you need to contact that servicer. No one wants you to be delinquent. No one wants you to default, right?
Yeah.
As long as it's a federal student loan, we want you to succeed, right? We don't want that to happen. So students are encouraged, borrowers are encouraged to contact their loan servicers to find out what options are out there. And anyone right now who has not saved up for the SAVE program,
Yeah.
that SAVE repayment program, I'm telling you, I have to give it to Biden. He won't let it go. He's like a Rottweiler. He will not let it go. And there's so many benefits to that. And out of 30 million borrowers going into repayment, you only got what, 5.5 million that have
Yeah.
signed up for that.
Yeah, let's get
That
into
education.
that. I want to get into some of these resources that borrowers can turn to because I know the different repayment options. There are a lot of acronyms, there's a lot of confusion, a lot of paperwork. Could you all talk about some of the repayment options that are out there on the table right now?
Well, in terms of SAVE, it takes 11 programs that we've had in terms of repayment options and pulls it into one. Okay, so if you are already in a repayment plan program, income contingent, income repayment, one of those, you don't even need to sign up again, right? You should be automatically enrolled in that. And if you have not received anything from a loan servicer telling you that, I would encourage you to find out who your loan servicer is first, because that person probably has changed. You know, all of the loan servicers kind of moved around a little bit. So we've got 6 different ones, more than likely. But sign up for that. The other thing I would say is, okay, I just lost my thought. Okay, so SAVE enveloped all those 11 programs into one. If you're a single person making 32,000, somewhere around there, you're not making any payments at all. If you're in a household of 4 and your earnings are 67,000 or so, there's no repayment in there. The loan servicer should be helping also, not making anyone have adverse credit reporting if they are not making payments, right? For the first year, they should not be reporting anything negative to the credit agencies. The other thing is if you fall delinquent within the first 90 days, you're not going to go into any adverse credit rating as well, because the Federal Student Aid Office will make sure that you have an administrative forbearance. Okay, so the goal again is to not have students going into any default or any delinquency.
Yeah.
Absolutely. And I think there's so many options out there for folks, and really the best resource is studentaid.gov. That's really the best option for you to see what are my different potential payment plans, what might I qualify for, what if I go into forbearance, what if I'm late on a payment, what does this new on-ramp really mean? Studentaid.gov is really the best resource. So for example, one of the things that you can also look into there is the public service loan forgiveness program. So if you work at a nonprofit, a government agency, or some other similar qualified institution, and your employer signed up for this program, you may be able to be eligible for forgiveness of your debt after 120 monthly payments. So after about 10 years, if you make consistent payments, you might be eligible for that. I know that with previous administrations, there were concerns about folks not being eligible for that program, or that program not being administered equitably. But now with this current administration, we've seen more public service loan forgiveness programs actually being enacted, and a lot more people finding relief through that. So definitely encourage you to look at that. But the other reason why I do bring up studentaid.gov is because there are a lot of scams out there. I think with all the confusion of so many different programs and changes, and people are like, wait, I thought Biden was canceling it. Now now the Supreme Court is saying no. Now there's this. Now there's SAVE. What's repay? There's a lot of confusion. So I think this brings about an opportunity for scammers to come in there, send these really official looking letters or emails, and be like, sign up for our program, sign up for this. So again, I would say if you have any questions or you want to check it out, definitely go to studentaid.gov. For instance, we had servicer recently that was actually Mohila.
Mohila.
Yeah. Yeah.
Mohila, yeah, one of the 6 servicers who was sending out incorrect payment options, who was giving late notices. So they were, on their end messing things up and sending wrong information to folks. We know about this because we heard about it from the Consumer Financial Protection Bureau, which is this government agency that's out there to try to protect consumers with any financial products like credit cards, student loans, mortgages. So there were complaints about that. And the Department of U.S. Education obviously also stepped in and started working on that. But just even one of my colleagues was like, yeah, I got a notice saying I owed $200 and then another one saying I owed $23. So that's a big difference, that it could be the difference of how much groceries you buy in a month. So not having that accurate information is very difficult to work with if you are getting all this crazy information. So again, studentaid.gov really is going to be your best resource.
And that's how you find out who your servicer actually is.
Yeah, that's
By
right.
going there.
Yeah. Yeah. Well, I heard a lot of confusion, a lot of frustration with servicers. And I'm just wondering where borrowers can turn to for help other than studentaid.gov. What are some other resources they can reach out to if they're running into some of these roadblocks?
Yeah, as I mentioned, Consumer Financial Protection Bureau. You can also file complaints on that, cfpb.gov. They have really awesome resources that allow you to explore and identify ways of like, how would I know if something is a scam? How would I know if it's not? There's also many advocacy organizations such as YI that are working on this issue and are really making sure that we put out really informative information out there that's been verified by the U.S. Department of Education. And then we also have, different centers. I'll name them in a second. I'm trying to find all of these in my notes. But we do have a lot of folks out there who are trying to make sure that you have the correct information based on what you need.
Yeah. Borrowers can also contact their institutions. If you're no longer enrolled, it doesn't matter. You're an alum. Contact the institution. Contact that financial aid office. Oftentimes, we have connections with whoever the FSA ombuds person is. And that's how we get all of those complaints and find out, if a servicer is misrepresenting what your repayment actually is. That can actually go into your benefit if we go through ombuds and reduce what the payments actually are or do some form of forgiveness. Okay, so yeah, contact your institution. I know most schools are contacting students who are enrolled less than half time because we know that they're about to go into repayment if they're not already. We're also going through our alumni to make sure that we're giving them workshops. The servicers we relied on heavily to put information out there about SAVE, to put out many webinars and workshops, 15, 20-minute workshops talking about how do I build a budget? How do I get ready to do repayment again after not having to do it for 3 years? Also, how do I find out who my servicer is? How do I know what best repayment plan I should be in? We relied on the servicers to help us do that. So it's kind of disappointing from a financial aid point of view that we haven't seen much in terms of their coming forth and advocating for the borrowers. But contact your institution if you're having an issue reaching your servicer, please.
Yeah, and a few other resources too are the National Consumer Law Center. And the Student Borrower Protection Center. So those are folks that we partner with. Again, that's the National Consumer Law Center and the Student Borrower Protection Center. And the other option too is it really is important to do all of this because you really don't want to not pay your loans. So we've had, I know I've heard from folks be like, well, my balance is so outrageous.
What happens if you don't pay back your loans?
Yeah, there's a few things. You can go into forbearance, you could become delinquent, but ultimately it's going to be a negative impact on your credit history, your ability to borrow in the future, and the government can come for you and start garnishing your wages or collecting money from you through your tax refund or anything like that. So it will come back and haunt you if you don't pay this and you're just delinquent. So definitely encourage you to make sure that you are on top of it, that you are figuring out what you need to do, because even if you are unable to make payments, as we've talked about, the SAVE, I think the acronym is Saving on a Valuable Education. Okay, there's so many acronyms that I forget. SAVE. It really was meant to target people who are having a really hard time making payments. There are folks who make $0 payments, and up to folks who make like $100 payments a month. These are somewhat manageable, a lot more so than what we were hearing before COVID, when there were folks paying $700, $800, $900 payments, and many of whom still are. But a lot of folks who are on SAVE, I believe the overwhelming majority of them actually were Pell Grant recipients. So we know that these folks were coming from low-income backgrounds, didn't have a lot of wealth to begin with. So when we're talking about having them pay back hundreds and thousands of dollars, you know, it does make sense to be like, well, let's make it manageable at $100 or so. But you don't want to become delinquent. Again, it impacts your credit history, your ability to borrow in the future. And although not a crime, you know, you will see some financial penalty in the future, and either through your wages being garnished or, you know, some sort of action like that.
Yeah, and use this year, right? Because this first year, the servicers are told, right, not to report adverse credit history. And in those 90 days of delinquency, you're supposed to be automatically enrolled into some administrative forbearance. So use this year to do some of the research, right? And use some of those advocacy platforms that Lily is recommending. Contact your school again, but again, use this year because this is critical.
Yeah, and there's one program called Fresh Start that does allow for folks who have been delinquent in the past or have had issues. That's again called Fresh Start. More on studentaid.gov. But there are a lot of folks who would benefit from getting back on track through that program. And as you mentioned, Mo, the on-ramp is it's called the on-ramp, and it's a year from October of this year to September of next year, where folks who are delinquent or maybe miss a few payments that might not necessarily be reported to credit bureaus. It's the idea being that, like, okay, we're coming from 3 years of no payments, right? And a lot of people lost their jobs, maybe changed careers. Inflation is going crazy. Like, a lot of us are struggling to make ends meet. And so let's give folks a little bit of ability to spend a year just getting back on track with making payments. So again, if you have been having issues, I think this is the year to address them.
It is.
Yeah. Okay, we've already covered a lot, including a lot of acronyms. So we're going to take a break to just answer some of your questions. Yeah.
So on behalf of all Illinois financial aid administrators, I do apologize for that. And maybe after we're done, I'd like to connect with you as a little bit of comfort, what we should be doing, right? Whether it's currently enrolled students enrolled less than half time or graduates of our institution. And Northeastern has done this. We've actually offered webinars for all of our alumni so that they can look at what the repayment means, right? What does it mean to me? And then at the end of the webinar, they were offered free consultation on financial building, right? So this was something that we did for our alum, and I know other institutions are doing that as well for their alumni. So I really do apologize for that. And then what my recommendation would be is that you make that institution accountable. You ask to meet with the director of financial aid, and you ask if there can be an appointment to navigate studentaid.gov with you. Okay.
Yeah, I'm really sorry to hear that, because it kind of, there's this sometimes we hear from folks that there's like a sense of like guilt, you know, that it's like, now I have all this debt. Yes, I took it on, but no, like now I have to pay back, but I need help, right? And that's awful, especially again when we were told we need to take this on to improve our lives, and we did that, and now we're being told that it's our fault that we're here. So I just want you to be reassured that, like, there is no shame in asking for help, and you have a right to have your questions answered. The other resource that might be helpful, and it could just vary depending on who your representative is, unfortunately, but you know, I've worked as a congressional staff, partly working with constituents. And so one of my biggest jobs and the jobs of any elected officials is to help you liaise with agencies. So the federal representatives can help you liaise with the federal agencies like the U.S. Department of Education, and then we have your state representatives who can help you liaise with any Illinois agencies. So that might also be a resource in giving your a senator, either at the federal level, we have Senator Duckworth and Senator Durbin, giving them a call and being like, look, I need help navigating this with the U.S. Department of Education. So I encourage you to use your elected officials as a resource as well.
Any other questions?
Thank you for sharing that.
Yes.
Test. Thank you. So I'm hearing a lot of like federal and federal loan resources. What about private loans? Do some of these resources that you list help with private loans? Just asking literally for a friend who has most of her loans as private loans and her payments are, $800 a month and she can't, she can't pay on that. So I'm just curious of like what kind of resources are out there for private loan carriers.
Yeah, that's a great question. Unfortunately, a lot of what we do see in terms of relief really only applies to the federal public loans. A lot of these private loans, one of the downsides is that they may not be eligible for a lot of the benefits that are offered to private or to public loans. I think it's still worth checking out the National Consumer Law Center and the Student Borrower Protection Center to see what resources may be available there. And again, also just keeping in touch with advocacy organizations who are working to also think about what do we do with these private loans that are harder to regulate. They're harder to get the payments more in line with like income driven plans. It's harder to consolidate sometimes. They're harder to forgive. And so being able to just stay in touch of what's out there is going to be immense, because I do, as an organization that we work a lot with a lot of young adults and a lot of people impacted by debt, there's a lot of movement to fix this issue. And I do believe that we will see some sort of relief or some sort of solution. I don't know when, but just given the momentum that's behind it, the number of people that are impacted by it, if we stay consistent, if we stay the course and we're pushing our legislators and our decision makers to do better, then I do feel optimistic that we'll get somewhere where folks are listening to us, and maybe one day we won't have people being like, I pay $800 for my student loan debt and now I can't afford a house.
Right. I'm positive as well. So the Illinois Board of Higher Education, as well as our state legislators, realize that there's two tracks here, right? There's the federal loans and there's the private loans. They are working with working groups and task forces to develop a method of doing a state loan program where students would be able to consolidate federal as well as private, but that's in the working stage. Doesn't really give much help right now. But in terms of private lenders, I think our largest one may be Sallie Mae. They try to be as competitive as possible with the federal loan program. They were a previous loan servicer themselves for the Fed. Yeah. So I would encourage whoever you're speaking on behalf of to contact Sallie Mae directly to see if, in light of all of these other changes and movements that are taking place, are they creating other options? Okay.
Yeah. We have time for about one more question, and we're going to have another break at the end.
Thank you. I guess there seems to be a lot of disconnect with education and financial literacy with where people are eventually at with all of their student loan debt. And so, Mo, I guess my question to you is, are there ways where universities could actually make mandatory at least like one personal finance class at the university level? Because, with my education, the only type of class I recall having is just a half a semester in high school as a senior. That at that point was, basically knowing how to write a check balance your checkbook.
I remember that.
But I mean,
Yeah.
but nothing was mandatory in terms of my undergrad degree or, my graduate school degree too. And so maybe in terms of, bringing up the financial literacy and education, are there opportunities, I guess, from the university standpoint on, bringing that education on behalf of the students up to par?
I would say in terms of mandates, that would probably have to come from someplace like the Illinois Board of Higher Education. But in terms of opportunities on our own individual campuses, we all have opportunities to do what we call co-curricular type of education, where financial aid would come in maybe 2 to 3 times out of a semester to a business course or to a first year experience course or to a freshman seminar, and then speak to just budgeting. What is a budget? How do I determine need versus want? Right. So we do have the opportunities to do that. I can't really speak to whether or not how many actually do. I just know that, Northeastern just takes pride on graduating students with least amount of loan debt. So we have to do a lot of things intentionally to keep that particular ranking because we want to keep it, right? But there are other institutions that do it as well. I'm just not sure how many, but there are opportunities to do that, yes.
And I do know that, at Young Invincibles, one of the things that we've been working on the state is creating a financial empowerment commission that would essentially consolidate all the financial education efforts in the state and then work with institutions like the Illinois State Board of Education so that a financial education starts really in kindergarten, your K-12 education.
Right.
And that, we also continue it through college and through all of that so that there's plenty of financial opportunities to learn about what is credit, what is, because I could tell somebody, oh, it'll impact your credit score. But if you don't know what a credit score is, you're not really understanding the full gravity of the situation, right? And so being able to understand that that's something that I know that the state has been working on, and it's something that, for instance, the Illinois State Board of Education, Illinois Board of Higher Education have been thinking about, have been working on at a state level. The one thing I do want to say too that is, we can't budget our way out of poverty either. So we can have the most amazing budgeting skills and all of this and understand credit scores to a T, but that doesn't mean you're going to have the income to be able to pay it all. And so I want to be mindful that we do need that education, but it's still going to require student loan debt cancellation for a lot of people to be able to afford a house and groceries and car payments and not feel like they're underwater all the time.
I mean, colleges and universities are not tone deaf to a lot of what's going on. We've got food pantries on campus, right? We've got clothing that we give to students who are trying to do interviews. So with the mental health increasing, I mean, there's so much going on that people are trying to deal with that you don't want to have to figure out, do I pay my loan or do I pay my gas bill? Do I pay my rent or do I pay my loan off? Or, when do I have time to try to find who my loan servicer is? Sometimes our lives are just that busy, right? That you don't have the time to allocate to all of this information that we're trying to give to you. So we understand. So make us do what we're supposed to do, right? If we're not there, make us be there. Just call and ask for the director if that's the case, particularly in the situation we heard firsthand.
Yeah, and also again, I mentioned your elected officials, and there's a lot of power in being able to call your elected official and be like, what are you working on to make sure that there's financial education for folks at all stages, right? One thing that we learned too at this task force that we were working on financial empowerment is that there's folks who are 65 plus and are now on Medicare and Social Security and don't know how to budget that either, right? So there's never, I think, really a time where you're like, I fully understand everything about finances, right? So being able to call your legislators and be like, I want you to work on this carries a lot of weight, a lot more than I think most people realize.
Yeah. So we're going to do something a little different just to take a little mental health break from all of this. We thought it would be fun to turn to your neighbors nearby and share what you would do if all your debt was canceled.
I mean, well, I might buy some shoes.
What kind of shoes would you buy?
I've been wanting some more ankle boots.
I think all of my loan, well, I don't have that much either. I was fortunate.
Yeah.
My doctoral program.
Yeah,
there.
I'm like, I love Nikes.
Nike, Pumas look nice.
Oh, yeah, yeah.
Yeah, you know.
Yeah, I know, because they just go on
your
your feet and
grants
then
and
they
stuff
get
come when
dirty,
you're in
right?
undergrad,
Yeah.
but you don't get that as a grad or
They're supposed to be tough.
Yes, yes, yes. This is especially true when I'm just like, why did I spend money on these? Like, I got these. I'm like, they are so good.
I think if I had extra
I
money,
can only-
I would like to be able to help homeless
Every
population
rock.
some type of feed
Oh, like what I
program
mean, like not
and career
No,
development.
yeah.
These are hopeless. And my friends make fun of me. They're just like, my friend.
Yeah.
He was like,
Yeah.
no. I'm like, well, these are hopeless. They help support like the heel, the shin, prevent plantar fasciitis. And he was like, are you squashing? I'm like, no. He's like, those are clown shoes. Shut up.
That was what was so awesome about this
He's not wrong. Because as
group
soon as
that
people notice
worked
my
with our
shoes,
alumni.
they're like,
I've
what are
heard,
these doing?
I've heard those are like
Demonstration
walking on
free.
clouds. So yeah,
Some of the students didn't want to do it because they're like, they're
Yeah.
gonna
I
charge
need
me.
more
It's like, no, it's supposed to be.
I'm the same way. I used to, when I was younger, I used to buy the
was
cheapest
really good.
shoes, like
Well, yeah.
$10. Yeah, I would go to Payless,
Yeah.
and now my feet are so messed up. So now.
Yeah, and you don't know until
Yeah,
over
that's too
time.
late.
Yeah, it's too late. Then your doctor's like, oh yeah, you need.
And you're not a
Yeah.
bad person.
Yes. Oh, you're officially adult.
Yes, you are for sure.
Yeah. Yeah. All right. I hope that was a fun break for you, because I know that this is well, we heard from a lot of our survey respondents that just like the immense toll that all of this has taken on borrowers' mental health. So I think it's important to take those breaks and sort of fantasize a little bit about what you might do if all your debt was canceled. But yeah, we left off talking about, you guys mentioned that there are these kind of, you seem to have some hope for the future. I was wondering if you could talk about, obviously Biden's mass debt cancellation was thrown out. But is it possible that in the near future or in the not so near future that there could be some other form of relief that comes down?
Yeah, it's definitely possible. So one thing right now that the U.S. Department of Education is working on is creating some rules that would allow for even further debt, either cancellation or reduction, and just repayment options for most folks. So the process to get that going is called negotiated rulemaking, where they have to bring in a bunch of stakeholders to discuss these rules and figure out what makes sense. The public is definitely invited, but oftentimes, just given that this is such a wonky topic, you often see a lot of like the industry stakeholders at these tables overrepresented more so than you see the average student borrower at the table. So one thing that we've done at YI is we've supported some folks to be part of that negotiated rulemaking. We do have somebody on there that we supported. One thing that was really important for us was to compensate this person for their time, because again, we ask a lot of folks to take action, but we're also asking the folks who are most impacted economically to take action. So we actually asked the Department of Education if they would have some compensation available for any fellows or any folks, borrowers who would be on this negotiated rulemaking. Fortunately, they did not have any, so we were able to fundraise a bit to be able to pay Jada, our fellow, who is now part of the negotiated rulemaking. So what is happening now is there's public input happening, and actually, I don't know if there's a slide with our information on it, but if there's a QR code and scan it, sign up for our emails, we actually do pull out a call for anybody who's interested in providing public comment, and we can help you prep, give you some help in like what it looks like, give you you some semblance of like, here's what you might want to say, and just help you be prepared to give public comment to the federal government. So all of these conversations are happening through December 12th. And based on what happens there, there's a few different outcomes that can happen. And we're still not quite sure exactly where it'll go. Right now, we're just kind of focusing on getting through December 12th. There's a few, I think December 6th and 7th, where there will be public comment options. So we're making a call out to anybody who's ever been impacted by student loans to call in and talk to the federal government directly and be like, here's what I've seen, here's what I want you to do. It's a really great way to get involved outside of talking to legislators, because that's oftentimes the most impactful, but there's so many ways to also speak out, and this is definitely one of them.
Yeah.
That
Yeah.
was gonna be my response. Negotiated rulemaking, so yeah.
Yeah. Yeah. I want to bring Brianna in because she has a pretty incredible story. She
Want me to tell it?
yeah.
Okay,
do you
I'll
wanna,
say,
like,
sure.
yeah,
I'll tell you.
give us the quick version.
Hi, everybody. So I graduated from Elmhurst College back in 2015. It's now called Elmhurst University, private four-year institution, and I graduated with $42,000 in student loan debt. The $42,000, I put myself on the graduated repayment plan. So for those of you who don't know, the graduated repayment plan it's a 10-year plan, but every 2 years, your minimum monthly goes up to the point where you're supposed to pay it off. So I got a job in food service, and then I got a job in my field in psychology, which I graduated in. And about 3 years after I got my degree, I realized that I either needed to study for the GRE and pursue probably a master's degree to maybe increase my income, or I needed to go into a completely different career path, enhance my experience, sharpen my skill set, enhance my persuasive communication, and try to achieve upward mobility with making more money and being able to save and paying off my debt and all of those things that you want to make sure that you have as you get older. So I did the latter instead of the former. I changed career paths from psychology. I'm now in the insurance field. But what I wanted to let you guys know is that when I decided to make a change in my career path, in between psychology and insurance, I went into the dental field. I decided to go back to school, but not my college that I graduated from. I went to a community college, and I took 2 intro classes for dentistry because there's a lot that you need to learn and be able to execute for dentistry. The first semester, which was the spring of 2018, it was fine. I cash flowed it, paid for it, no problems. The second semester, which was the last class I was going to take before I decided to go ahead and get a job into the field, 2.5 months into the fall semester, I get a random email from my student loan servicer, which was Navient at the time before they were, cut. And they sent me an email saying that you've been approved for an in-school deferment. Usually my understanding is that for an in-school deferment, you have to request that before the semester starts. I did not want to be on an in-school deferment. I didn't request it. I was already making my payments as usual, and I was making extra payments on top of that. I ran out of that class and I called Navient. I spoke to 6 representatives. I said, take me off in-school deferment. This is not what I want. Each one kept putting me on hold. Let me take a look at your account, get back on hold. And they would say, oh, it appears that someone from your school backdated your in-school deferment request. And if we reverse this like you're asking, you're going to owe even more money. I asked them mathematically, how is that possible that I would owe you more money when I'm already making payments and extra payments on top of that? And each one would tell me the same thing. There's nothing we can do. If we reverse it, you're going to owe more. Eventually, the 6th person I spoke to, I said, just give me to a supervisor. Give me to whoever's in charge. Let me speak to that person. That individual, I don't remember their name, I blocked it out, but that individual said the exact same thing as all the other representatives, just more eloquently. And his response was also, Brianna, if somebody gives you $3,000 for your birthday, you could put it towards your student loans, as if that was a problem-solving idea to the situation that I brought forth to him, that no one's going to give me $3,000 for my birthday. It'd be nice, but I'm not going to get that. So at that point, I felt defeated because no, I didn't want them to reverse it to make me owe more. But what did this look like? When I told you guys that I graduated with $42,000, that was 12 loans that I took out. And for those of you who are not familiar with the in-school deferment, when you're in in-school deferment, what you're saying is you are pausing your payments. And obviously that's not what I wanted. All of your unsubsidized student loans accrue interest. Out of all 12 of my loans, 8 of them were unsubsidized. And out of all 12 of my loans, those 8 that were unsubsidized had the highest interest rates. They had the highest principal. So I absolutely did not want this. And so, like I mentioned before, my student loans go up every 2 years. My last 2 years, they told me my minimum monthly payment was going to be $990 per month. And that's not including the interest, which I was accruing $180 in interest every single month. If you want to get intentional of paying down your student loans, you have to meet your minimum, and then you have to pay higher than the interest rates that's accruing because it compounds on a daily basis. And this was devastating, infuriating. It was a mixture of emotions because I was penalized for something that I never asked for. And just as I was starting to change the career path. So it was absolutely crucial that I was going to be able to achieve this trajectory that I was trying to set myself for. Long story short now, I apologize. I just wanted to give you all that background because I don't hear too many stories about this happening. But during the payment pause, the 0% interest rates, that is why for me, it made nothing but the most sense for me to make payments during my student loans. I still work 2 jobs. I worked 2 jobs for like the last 6 years, and I brought my student loan balance from $42,000 to $10,000. As of today, I now have it at $6,700. Once the payment that I just made yesterday goes through, it'll be $6,200. And so I just want to let you guys know that this has been such a long road. And when you guys talk about student loan debt just crippling you and making you feel devastated and apprehensive and all these emotions that's going to be making an impact in several aspects of your life, I understand. I do.
Yeah, Brianna, you did this. Do you have any budgeting tips?
Yes. If you can't afford it, you better put it back.
How do you make space on your budget for, and you guys can pitch in too for those monthly loan payments?
Yes. So for me, I love Potbelly's, and there's other restaurants that I like too. But I mean, I'm gonna pull this out of my purse right now. This sounds silly, but I decided that in order for me to stop spending a lot of my money, I did pull out, I made a budget and composed everything, and I was spending a lot of money on food. I know I look small, and the older generation is always telling me, like, you need to eat. I do eat. So that's why I feel like it's very important for me. I have these 2 envelopes here, and so one's for groceries and one's for takeout. And so for my takeout, I only spend no more than $100 a month, and so I can physically see it. And so when I'm at the Trader Joe's, yeah, that all looks delicious, but I only have $20. I'm not getting these snacks. I'm gonna get a meal because I'll get paid on Friday. That's part 1. Part 2 is when it comes to my student debt, what I did is that I know that on the internet, there's a lot of conversation when it comes to doing the debt avalanche versus the debt snowball. For me, when I did the math, I did the debt avalanche. I attacked my interest rates that were at 6%, 6.55%. The interest rates that were 4.7%. I got rid of those first because even though this all compounds every single day, those were providing me with the higher payments and they're contributing to my high monthly payments. So I got rid of those first. A lot of people prefer to do the debt snowball because they take.
How is that different? Yeah.
Yes. Oh, yeah, sure. I forgot to. So the debt snowball is when you decide to pay off the smallest loans first, and then the avalanche is when you decide to pay off the ones with the highest interest rate first. when you go into whichever your portal is for your student loan servicer, you can go to the interest calculator and it'll show you every single loan with the principal balance and the interest rate, how much it accrues on day one, and you can change that and see day 2, day 3, all the way up to day 31, how much each one accrues on day up to 31 days. And so that told me that the 6.55% interest rates, they have got to go because they are taking up too much space. Like I had mentioned before, I was beforehand accruing $180 per month. I'm now accruing $19 per month. My monthly payment is now $150. And the other thing too that I recommend for everybody, which they don't really talk about too much, is that you need to constantly ask, what is my estimated payoff date? I know estimated payoff dates they look bleak. No one wants to look at them. But the reason why I say it is because I have less than $10,000 left to pay for my student loans. But when I call Advantage, that's my new servicer, they'll tell me that my estimated payoff date is 2030. That's 7 years. I'm not going to take 7 years to pay off my student loans. When I do the math and I make higher than the minimum, higher than the interest, I'll be done in less than a year. You have to get intentional and make a plan outside of the repayment plan you've signed up for. You've got to make a plan for yourself. This is what I'm going to do to approach this and get out of this sooner than estimated. Because if you haven't realized it now, student loan servicers, they will continue to push back your estimated payoff date over and over and over, which is why you have a lot of borrowers who don't realize that after all these years I've been making the minimum monthly payment, why hasn't it gone down? Because it's designed for you to stay in it for as long as possible.
Yeah, Lily and Mo, I'm wondering, you have kind of the route of being on an extended repayment plan that may eventually get you cancellation, right, for the remainder of your balance versus like what Brianna did, which was try to get this paid off as soon as possible. Do you have any thoughts on like pros and cons for folks and just like why you would pursue one route over another?
Well, it depends on your financial situation.
Yeah.
You were fortunate enough to be able to do that. And then you had the fortitude to ask the right questions and look at your indebtedness. Not everyone can do that. Some students can't pay anything, right? So I'm commendable about what you did, though, because part of being able to make payments is knowing what you've got to deal with, right? And then saving receipts so you can see where you're shelling out the most of your money, make coffee at home instead of Starbucks sometimes, but save receipts. I tell students that all the time. Do it for 10 days straight and you can see where your money's going, right? And where your waste is, So if your goal is to pay off the highest interest bearing loans first, the way to do that best is to see where you're wasting and then rechannel those funds.
And I think that it also depends on how you want to live day to day and what other expenses you have at the moment. So you might have medical debt too. You might have a mortgage that you have. You might have a car payment that's gone up. If you were in an accident or something, your insurance premium might goes out, right? So it also depends on what you have. I would suggest there's so many free borrowing tools and budgeting tools online. So definitely look at those and play around with what works for you. I think for me, it was a hybrid of many different things. One thing that I don't think I realized was that there are some employers that will make payments on your behalf as part of your benefits package, is paying off your student loans or making your student loan payment. So one of the ways that I was able to pay off my student loans, probably 10 years ahead of schedule, was because I worked for the federal government and I had no idea that they actually provided this benefit. So it was an added bonus. So I was making for 1 year or for 2 years, I worked with one office and they paid my minimum. Then I was making like 32,000 living in like one of the highest cost of living cities in America. So I didn't really have a lot of extra cash to pay towards my minimum, but I was like, at least it's getting taken care of by the federal government. That's like $150 extra in my bank account every month that I desperately need. And then when I switched over to another office, they almost tripled, it was almost 4 times as much of my minimum payment. So working there with a year was like the equivalent of making 3 years of minimum payment that I didn't need to make. And then at some point I was able to pay off my private or my public loans. Then I only had my private loan to work with, which I took out as $5,000 my sophomore year in college, thinking like, oh, it's only $5,000. I didn't really understand. I mean, I knew how to calculate interest. I didn't really know what it meant. And so then once I got older, I was 7, 8 years out of college, and I was still paying down this $5,000 because of all the interest that had accrued. It was a private loan. And so finally, I at some point I was at like $4,200, and I was like, oh wow, all these years and I'm barely $800 in. And so what I did is I got my tax refund. I got it for $4,500 that year because I didn't make a lot of money, and I paid it all off to my servicer. And part of the reason why I did it was because I wanted to save money on interest. So not paying it off meant that I didn't have to keep paying. And also I just wanted to make Bank of America mad. I was like, no, you robbed me of all this money all these years. Like, no, I'm not gonna let you keep robbing me more. So, if there's extra cash that you come about, is it something that you could put towards your debt? That's what I did with my tax refunds. Actually, I did it for a few years, and that helped as well.
Yeah.
Another thing I just want to add really quick is that I too, when I was taking out student loans, I had no idea. I just said that I'll worry about it. I'll cross that bridge when I come to it, and I will never say that again, because my goodness, how big of a burden it truly is. During the COVID-19 forbearance for the 3 years that we didn't have student loan payments, I was binging YouTube videos of a mixture of trying to understand student loans, repayment plans, also student loan horror stories, because there's a large amount of student loan borrowers who they've had it for over 20, 25 years, but they agreed to a 10-year plan. So I wanted to make sure that I wasn't going to follow in those same footsteps. So that's why I had to do the math. I had to do it for myself. Now you don't have to because you have the interest estimated, but it's still important for you to budget so that you go higher than that minimum and you can get out of it sooner than anticipated.
Yeah. Yeah, well, I wanted to leave some time for a couple more questions. So if anyone has one, now's your chance. Yeah.
I don't want to hog the questions. And what do you recommend? So my situation is I'm the sole earner in my house. And so I have to make enough to be able to cover all of the payments that we have, our groceries, all of that. And it consistently puts me just outside of qualification for any kind of repayment, like the SAVE plan. I make too much to be able to, and it feels like such a privilege to say, and I'm the sole earner in my house. And so it's, I just feel like I'm stuck between a rock and a hard place. So I don't know if you have any recommendations or thoughts around that.
My recommendation would be, because the intent of the SAVE program was to consolidate all of these different repayment options that were out there. But, and I'm glad Navient's no longer a servicer.
Me too.
But it is the role of that servicer to hear that story and say, oh, here's what's in my Rolodex. This looks like it fits you. Can you do this? No, that doesn't work. Well, can you do this? That's their role. That's why the Department of Ed has contracted with them to be servicers. And actually, if they don't pass the test after a certain period of time, they fall off. Okay. But that would be my initial recommendation, to do that.
Yeah.
I mean, Yourself. Yeah, again, I would even try Senator Duckworth or Durbin's office and ask if they are able to help you liaise with the Department of Education, because there's options out there. But it is tough for those folks who are like just outside of reach, you know, and it does kind of feel like a privilege, like, well, I make too much money, but then you look at your bank statements, you're like, I definitely don't make too much money. Like that's my issue is not that I have too much money. And so it definitely, you know, reach out to your officials and keep asking questions, because there's going to be something out there for you. If not now, it will be. Again, I'm optimistic that with negotiated rulemaking, that with all this pressure that's coming from, you know, people like you every day that's speaking out, I do feel optimistic about solutions coming in the future.
So between negotiated rulemaking and IBAG, which is the Illinois Board of Higher Ed, those plans, because they hear the constituents in Illinois, those plans to work with loans and the indebtedness here, and they get the two tracks and the two different types of loans. Between those two, I'm sure that we'll see some growth. Yeah.
So the negotiated rulemaking that you're talking about that's happening now, is that still part of the SAVE plan that's still coming together, or is this beyond SAVE we're talking now?
It's an addition to the SAVE program. So like I mentioned, Biden not being that Rottweiler, not wanting to let go. So kind of turned him off when these lawsuits came up and it shut down in SCOTUS, the loan forgiveness program. So he's going the other route that he knows he can take, right? So this is an addition to that. SAVE is intended to reduce loan payments or make them zero and to consolidate those 11 programs. This is intended to provide some of the forgiveness opportunities through a think tank type of process.
Yeah.
Do you want to add any?
No, I think that's right. Yeah, it's the process of coming up either with further programs or rules of payment, so that there may be further options for forgiveness. But SAVE, it's its own program that stands right now.
Very quick question. So I'm very lucky I work at a nonprofit. I'm in like year 10 of working at a nonprofit, PSLF, soft plug for working in nonprofits. But I've just made my 112th qualifying payment of 120 that will eventually get me completely forgiven. And I am paying my like lowest amount possible, just because I know it's going to be gone soon. And I don't want to overpay. But one thing, once I reinitiated payments, I noticed that I got so used to after I'd make a payment, I would see my ticker go down of how many payments I had left. That ticker stopped going down this last couple of months. And I didn't know if like there are changes to the programs that just haven't gotten caught up in the systems. I talked to my servicer and they were like, no, you're still in there. But I didn't know if like with PSLF and some of the other changes as part of the SAFE program, when you go into your accounts, are some of the people you're working with seeing like similar delays or just change? Like, where's the best source of information if not your loan servicer?
I've definitely heard that from folks, that the ticker hasn't caught up with the amount of payments that they've made. I don't know what you all are hearing about that.
Yeah, we're hearing similarly again, not just from our base and network, but also even from my colleagues who are like, I don't know what my balance is right now, right? Like there's no way for me, or like it says a different number a different day, which we know happens with interest, et cetera, but it's wildly different. And so I think right now, yes, just keeping in touch with your servicer is probably going to be your best option. I would say if you can get anything in writing, it's probably going to help you. So if you can email folks and get email responses, I think documentation is probably your best bet just to be on the safe side for the future.
Yeah, I agree with that.
Yeah. One more question.
That was exactly what I was going to ask. I thought I found out who had my loan, but I also asked for them to mail me something so I would have it in writing. I have yet to have received that. And so it makes me leery. Did I contact the right people? Did I give my information to the right people? I'm not even sure. And now that I'm into almost my 20 years, I also work for a non-for-profit that just shut down immediately. I mean, just drastically shut down. I asked the question, I worked at a school that was for a non-for-profit. Do I qualify for this other forgiveness program? And I was told I would get something in the mail. Not anything. I never received anything.
Yeah, again, I think I would say if you can follow up with email to get that like written documentation, that'd be great. But also I think this is to make another plug again for your representatives who can help you liaise with some of these agencies and telling them that like I'm not even getting mailed response or I'm not even getting mailings from them when I ask them to mail me information.
Yeah.
I think that's something that they definitely would be able to look at. If you do call your legislators, especially the senators, Duckworth and Durbin, they have offices all over the state and in DC. I would encourage you to call up the Chicago office. That's probably going to be the best bet to help you liaise directly with the agencies.
And if you're able to meet with that financial aid director of your previous institution, ask for an appointment. That way, he or she can help you make that call during that appointment. Okay.
Yeah. Well, thank you all for joining us. Thank you, Brianna, Lily, and Mo, for just sharing your wealth of wisdom with us. I hope that you all found it helpful. And I would encourage you to, check out Young Invincibles. And also we have a bunch of stories related to student debt and some explainers with answers to questions that we got from our listeners and readers. So hopefully you all find some helpful resources amongst all that.
Yeah, thank you. Thank you for
Thank you
having
guys
us.
for coming.
Thank you.
Thank you.